bloody, brutal, and brutish. This is how we end a very interesting market week here on Business Morning. Hello, everyone, and welcome to Friday, the 30th of November. Is the final trading day for the month, and then we're coasting home to a brand new one from Monday. Let's get the show started with the hour. What do we have this morning? Nigeria Post Authority has refuted claims by the Senate that the sum of 117 billion naira is outstanding remittance from the agency in its 2017 revenue due to consolidated revenue account of the government, what you call the Federation account, very simply put. The agency, the NPA, issued a number of statements on its official Twitter handle late yesterday, saying the total revenue for 2017 was 303.9 billion naira, while its total expenditure, including of the current and capital, was 205.8 billion, trying to provide clarity to some allegations by the Senate that the agency is owing the government 117 billion in unremitted revenue for 2017. So if you do the deductions there from revenue and the recurrent and total expenditure, that brings you to the sum of about 60 billion, which they said, which brings you to an operating surplus, I beg your pardon, of 38 billion naira. But the NPA says the sum of 60.12 billion naira was, quote, uncollectible revenue from some port concessionaires due to clauses in the agreement, which the NPA says is currently reviewing. And that's where we want everyone to take some notes. What clauses are there in the port concessionaires agreement with the government, which was signed years ago, that makes some revenue uncollectible into the pocket of the federal government? 60 billion, those folks are holding on to their as government revenue. So that's where the devil is, as you always say, is in the details. So the NPA says the agency is left with operating surplus of 38 billion naira for 2017. So out of that 38 billion, how is it spent? NPA says the sum of 30.4 billion, which is about 80% of the total of the operating surplus, was remitted to the consolidated revenue account in line with the relevant provisions of the law. So the sum of 11 billion.3 billion has been paid for 2018. So clearing 2017 and talking about the current year, the Nigerian Port Authority says the sum of 11.38 billion has been paid into the federal government account for this year, clearing 2017 and providing an idea of what's been paid so far in 2018. Let's go to the power sector. The concessionaires of Kanji and Jebba Power hydropower station says they're in talks with the Burkina Faso government to sell the stranded power in their facilities. The power plant's CEO, Lamu Audu, says the power plants currently generate 20% to 25% of energy into the national grid and ramp up Kanji from 0 to 440 megawatts. Audu says currently the company has a capacity of 992 megawatts, but on the average, it's only 600 megawatts to 650 megawatts that is utilized, saying that the stranded energy is impacting the power company's ability to attract more funding for capacity expansion and recovery. So the power plant is planning to sell those are what you call the stranded power to Burkina Faso, and says talks is currently ongoing. Meantime, today is a big day for the Chartered Institute of Bankers. The Central Bank Governor, Godwin Emefiele, will be speaking tonight at a dinner for the Chartered Institute of Bankers. It's an annual ritual for the sitting Central Bank Governor to speak at the rounding off of the year dinner for all bankers and banking institutions. And as always, Lagos is the home of Nigerian banks. So as usual, the dinner talk is by Godwin Emefiele will be taking place later tonight at about 6 p.m. Everyone on the market street always watch the central bank governor speak, and not just in Nigeria, anywhere in the world. If the central bank governor, the Bank of England, or the US Fed is speaking at any dinner for bankers, every banker, everyone in the market watch for what you call signaling. These presentations always come towards the end of the year, so it's an opportunity to read the lips if you don't find it on the script, but read the lips of the central bank governor as to what's signaling in terms of monetary policy, in terms of exchange rate direction, in terms of interest rate direction, is a quantitative easing, whatever you want to learn, what will be happening in the coming year. You will hear that if you know how to read the tea leaves of the central bank governor. Tonight, the central bank banker, Godwin Emefiele, will be speaking from 6 o'clock in the evening. We are on top of that for you. Meantime, we're stepping out into the third quarter or the final reporting season for the year. Tier 2 lender FCMB Group yesterday released its 9 months earnings, showing 132 billion in gross earnings against 118 billion reported in the first 9 months of 2017. This lender reported a pre-tax profit into double digit, 14.7 billion for the first time against 6.8 billion on a year-on-year basis. Net profit came in at 11.3 billion. That was significantly better than 5.4 billion reported in the same period last year. Earnings per share by FCMB Group, 57 kobo against 28 kobo in last year. Very sweet, but those numbers are not numbers were ignored by the market. Of course, yesterday the stock market went down significantly. So the market ignored the FCMB's earnings, as sweet as they were. The stock slumped 8.33% on Thursday to finish the day at 1 naira 32 kobo on the counter. As you have heard, no good news is news, and the market is bleeding. How did we lose yesterday? A very blistering Thursday, bringing this week to a close, and that's bringing us to year-to-date negative nearly 20%. 19.96% is the negative index return of the Nigerian stock market since the 1st of January. Okay, that's it there. We lost 32,000. This month, we lost 31,000. Now we're at 30,000. A new reading, 611.55. We're down to 11.175 trillion naira. But in terms of turnover, investors were quite aggressive. So we see one of the highest turnover for the current week, 441.6 million. We started the week around 120 million shares, but we're now rounding off on this very sweet note. As far as the turnover was concerned, in terms of naira value, that's significantly higher on a Wednesday figure, 4.46 billion naira. And the deals north of 3,000, beating Wednesdays by a few hundred transactions. So where are we? GT Bank led the banking sector into a very sharp decline, 1.79%. Consumer goods was a little bit better because investors are still pricing more into Nestle and international breweries despite a bit of a decline in consumer spending power. But, well, investors have the mind of their own. Where are we with industrial goods? That's a negative 2.14% because Dangote Cement lost 2.63%. Insurance still coasting home in the green territory, 3.09%, thanks to the Continental Insurance, 6.95%, and the share exchange for Continental Ray. And you have oil and gas, tepid 0.05%. We'll talk a little bit more about the markets later on and what to expect in the new month of December.